Mumbai. If you give some 5:30 time, it always spreads out. But we have got a very tight schedule today, and you're a fantastic speaker. Can I request Dr. Reddy and our chief speaker, Mr. Hemang, kindly take a seat, please. As I said, a lot of people are coming up. I'll request them to pick up their tea and then sit down. Okay. This investment club is all about financial freedom. But before I go to the main topic, let me take the opportunity to introduce you, both of us actually. We two have joined together more or less with a 15 days gap. I am Dr. Regenesys Sanyal. I am now the country head of Regenesys Business School India, and with me is Dr. Sunil Rai. Sunil Rai, they want to see you. He's the director of the same institute, so we two are there to, whatever happens, good or bad, we two are responsible. So anything bad is we, anything good is all of us over here. So here we are. Dr. Sunil Rai has a long career. He was in the Navy, Indian Navy commander, and thereafter he took the academics, did his PhD from BITS Pilani, and I am Dr. Regenesys Sanyal. I am the country head of Regenesys Business School India. Okay, and thereafter he joined SP Jain as a faculty professor over there. After that he headed many institutes. He was finally he was with Bombay with Goa Institute of Management director over there. He was in SP Jain. He was the NMIMS where we two worked together. I was with NMIMS Business School heading that, and he was heading the Mukesh Patel Institute, another NMIMS outfit. And he both was a dean in our own way. So there we spent quite a lot of time together, and again we are together. So here I've got a team, small team today, but we expect it to grow. Here's Manish with me. I cannot see others. Others will be outside receiving guests. So here we are. We're a small team. We are trying to look big, and with your good wishes and support, we should be someone to reckon with in Indian management also. We are a big school as far as Regenesys Business School South Africa is one of the top in South Africa. In 16 years' time, they have made a name for itself, has got all the program accredited, and we hopefully will do the same. If not, our endeavor will be to go even further. With this, I take the opportunity to, I'll request Mr. Robin to come up and tell about the program. But before that, I would like to thank both my speakers today to be here. I'll take the opportunity to introduce you as before they speak. But Robin, can you please? Mr. Robin happens to be the main person who is driving, or the main key person to drive this initiative from Regenesys Business School, and he's in charge of marketing also. Huh? Is it? But he's a fantastic gentleman, a very well-known corporate guy, especially in HR field. And I'm so happy that you are here once again. Thank you very much.
Thank you, sir. Thank you, sir. Good evening, and a very warm welcome to all of you. I've been given about 10 minutes to update you about what are those things that happened over the last 2-3 months here, and how are we starting this club here. Okay, what is the evolution of this club? Okay, very quickly I will take you through a small presentation. Okay, it will not exceed around not more than 10 minutes. And at any given point of time, if you have queries also, you can keep it ready, then we can have a Q&A session later, at a later stage. So I wanted to call this the genesis of Regenesys Investment Club, okay, because how it evolved. It is very important to tell you about somebody called Marco Saravanja. How many of you have met Marco? Most of you have actually met, okay. So I really do not give you, I don't have to give you a detailed detailed introduction of Marco. Marco is known as a monk who got into material world for about 10 years, and he made around $100 million US in the stock market. Okay, I think that makes it very credible for him to be the guiding light for this particular investment club. Marco, at a very young age, wanted to started searching for the way of spirituality. He started searching. When he traveled down to India, he learned yoga here. he went back to South Africa. For about 20 years, he was in the spiritual world. He did a lot of meditation, various kinds of spiritual practices. And after 20 years, he said that, okay, why not now get back into the material world? That's how we decided to come back. And from zero, from literally from nothing, it seems he started trading in the stock market. And he made around in 10 years time, he made around 100 million US dollars. That's around 600 crores if you really talk about rupee value. And he invested that amount, put that amount into education. That's how the Regenesys formed, the Regenesys Business School. Today, he is the chairperson of Regenesys Business School. And very recently, around on the 23rd of April, we had a session on financial freedom, which was conducted by Marco. We all were present. We were around 40 of us here. We were so excited about listening to his story, about his journey in the spiritual world as well as in the material world. Then we said, why don't we also do something like an investment club out here? Because Marco said that he already has an investment club in South Africa and it was doing pretty well. In about a year's time, it became a private company. So now today in South Africa, Regenesys Investment Club is a company. They are aiming to convert this into a banking organization, okay, in the financial sector. So when we talked about it, then we said, why don't we also have something like this in India? That is how the seed was put in at that point of time. On the 24th of May 2014, we had the first meeting, the first committee meeting out here. So the committee was formed. So we had a main committee as well as a subcommittee. I'll give you information on that. During that committee meeting, we defined the purpose, the vision, the objective, and the committee structure. And on that particular day, the committee members also were selected, and we also discussed about the way forward. This happened on the 24th of May. Okay, so we also had a small session about some of the techniques those are used in the trading zone. So some of us shared how we go about trading in the stock market that day. So this is a flashback of what happened till now. What is the purpose of this club? It is to achieve the financial freedom. This is open for everybody. Okay, we wanted to make it very simple. And the vision is to transform this club into a financial services company. We hope that in the next couple of months or years, we will convert the entire thing into a financial services company. What are the objectives? The objectives are to learn from each other and to break the fears. One big learning that we had in all the interactions with Marco was that people do not make money at times because we have limitations. We think about limitations and we stop ourselves. We get scared. So unless you break the fears, it is very difficult to move on and make money. So with a lot of experiences, his own experiences, he explained to us, and the other objective is to achieve financial goals. What are the highlights of this club? One is, it is a free membership for everybody. We do not charge anything at all. And we have people from all the walks of life. People who have been trading for a long time, people who have just started off, people who would want to get into a lot of aspirants we have, and even when I talk to a lot of people, they have gone and taken some memberships in trading firms. Okay, so we have people from all the walks of life, and we also get guidance by the industry experts and highly successful traders. So we get to learn from them. And whoever wants to open a new demat or the trading account, we want to support them. So we will have a tie-up with various organizations to come in. We will facilitate all those account openings. And this will be a fantastic networking platform, because when people come from different spaces, we get an opportunity to meet each other, look at various possibilities, business opportunities too. These are the highlights. The committee structure, Dr. Sanyal is the chairperson. You have met Dr. Sanyal already. And the deputy chairperson is Shamita Shetty. Shamita, can you just raise your hand? Administrator and the treasurer, Agnello George. Agnello. Shamita is into recruitment and Agnello is a trainer. Okay. He's a freelance trainer also. Apart from trading, he does a lot of trading, especially after attending Marco's session on financial freedom. He says that he has made a lot of money. Right, Marco? Right, Agnello? Dr. Reddy, he is in the subcommittee. He is responsible for the events and the research and knowledge. Dr. Reddy is a financial expert. He understands the markets very well. Okay, therefore, he will also be able to guide us. So, especially in the area of research and knowledge. Robin, that's me. And I have taken up the responsibility to do a little bit of marketing and increasing the number of people, the memberships. We are looking at a very good number. At least in the next 2 to 3 months, we would like to have around more than 100 to 150 people in the club. So I am sure that you all will be able to help us, because it is all about learning and interacting with each other. There is no expense out here. You don't have to spend a penny out here. That is the beauty. And Manish is here. He's a part of Regenesys at the moment. And he's also into marketing and memberships and organizing the events. For example, now such an event like this, he will do a lot of work to get the whole thing done, the whole thing organized. And then we also discussed about the trading strategies. We said, okay, if you have to talk about low risk investments, then we discuss about equities, getting into equities, buying and keeping and selling later. Medium and high risk derivatives, or the FNO, the futures and options, that segment. So we said primarily the investment club would deal with these two areas, equities and derivatives. That is the thought we have had at this point of time. So that will be the focus. The way forward, as far as the learning is concerned, we decided that every last Thursday of the month, we will have a meeting between 7 and 8 p.m. And during this meeting, we will share our experiences. It may not be only the speakers, even those guys who are already trading would come back and talk about some of the scripts. We would talk about some of your bad or good experiences from which all of us will learn. And we also plan to cover industries such as infrastructure, oil, real estate, power, banking, and so on. So every month we would like to have one expert from one of these industries to come forward and talk to us. So we are trying to get that done. Also, we would get to learn about the definitions, techniques, and terminology. So, for example, today, Mr. BPS Reddy would be taking us through some technical analysis where he's going to use a lot of terminology, where we all will get to learn. And also about the networking. So, as much as possible, we will connect with each other, and maybe on a WhatsApp, or else maybe on Facebook, on LinkedIn, we can be connected. Okay. So we also discussed about institutions to engage with. These names came up from our own experiences. People who were around that day, we said, okay, these are our experiences. Probably we can deal with these companies. And we would still recommend you guys to tell us, recommend some of the names that you are comfortable with, so that we can help people out with these names. Franklin Templeton was one. Yes Bank, Axis, Kotak Mahindra, HDFC Securities, Sharekhan, HSBC, and Saxo. Saxo Bank is operational in India right now. Delhi, they have got a branch. So with the Saxo Bank account, you can trade in the international stock market also. So that will be open to us. We will explore all these possibilities. So that's about this club at the moment. This is how it has evolved till now. Now we are having the second meeting, where we're going to have two speakers helping us understand everything. And I've heard this somewhere. Somebody was telling me the other day that there is a saying, money is not everything in life. Okay, but make sure that you have made enough of it before you talk such nonsense. On a lighter note. Okay. Okay. Money is not everything, of course, but then money is something that we really need, and I think investment is something that we need to look forward to. Okay, with this thought, wish you happy trading, and over to you, sir.
Thank you. Thank you. Thank you very much. Thank you very much.
Manish.
Okay, before we go forward, I'll take 2 minutes to tell you that about Regenesys Investment Club in South Africa, which he has already mentioned, Robin. And one can open the trading account with them also. People could open it in Regenesys Investment South Africa account, which is now fully accredited financial service provider, and one can trade globally on 40 exchanges through it, including derivatives, through Saxo Bank, and which is Danish global bank, which Regenesys Investment Club initiative. So you are welcome, and you can join and register yourself with our investment in South Africa with the financial service provider, as I mentioned. We can give you more information on that. And with this, I now move on to our first speaker of the day, Dr. V.B.S. Reddy. He is an MBA, he has an MSc, and he has done CIEB in banking professional. His experience is an ex-chief dealer of Andhra Bank, dealing trading, operational risk management, forex. 7 years he did that before he became the director of Lybar Capital Advisory Corporate Finance. And he now gives talk on corporate finance to various institutions, about 30 of them across the country. He's teaching for around over 15 years now, an expert in technical analysis, and he is well known with the fraternity of chartered accountant, cost accountant, and all the content in the country. Today we have him, and he will be giving a talk to us on technical analysis. Thank you very much for joining us. Dr. Reddy, please, your story is yours.
Friends, good evening, friends. I am very happy to be with us. I am very much grateful to Regenesys Business School to give me the opportunity. Friends,
Can you use the mic, sir? You want the mic?
what mic I want that PowerPoints to be.
It's on.
PowerPoint 0. PowerPoint is next one. You want this? Go to next PowerPoint.
Ajay, you want to say about
Yes. Yeah, it's all the yeah, I will speak. Yeah, the whole. Not it. Friends, technical analysis is a study of prices trends, prices of shares, commodities, currencies, for projecting the or predicting the future price. Technical analysis is watching or analyzing or studying the prices of the past prices. For example, what happened yesterday or previous last week, last month, like that. So what will be the future for tomorrow? That is about the technical analysis. In case of technical analysis, what we do, we analyze the history. We go to the history of the prices to predict the future price. For what is the purpose? Purpose is to buy and sell the stocks, commodities or currencies. And technical analysis is used for all the asset classes, commodities, currencies, derivatives, foreign exchange. All the commodities we use. And here we use charts. We use charts for the technical analysis. This technical analysis, what are the assumptions behind the technical analysis? Technical analysis is based on the major assumption is price discount everything. The price which is traded on the exchange is discounting. The people who are trading, they know everything about the asset. That is the major assumption about the. Second assumption is the prices move in trends. The prices move in trends. They are not randomly. They don't move in randomly. They have in a trends. So that means the trend means we can easily predict what will be the next trend. Next one is history repeats. This is the third assumption. History here the history means the same trends will be keep on repeating. Here in the trading people are involved. The people will be committing the same mistakes repeatedly. That is the major assumption. Friends, there are two approaches for buying and selling of the stocks. They are very popular. One is fundamental analysis. Second one is technical analysis. They are like I can say like right and left hands. You cannot separate both. Both hands are required. Like both fundamental analysis and technical analysis are required for buying and selling of the any securities. See, this fundamental analysis will tell you which stock to buy, which instrument to buy, and technical analysis will tell you when to buy. So we should use both. See, for example, we can say in a funny way, fundamental analysis will tell you which boy or which girl to marry, and technical analysis will tell you when to marry the girl or boy. In a similar way, fundamental analysis will help you which stock to buy or which stocks to sell, and technical analysis will help you when to buy or when to sell. And the major one, the superiority of technical analysis over fundamental analysis is fundamental analysis ignores risk, whereas technical analysis will tell you what is the risk, to what extent you may lose. With that risk, you can plan or reduce the risk. Ultimately, you have to reduce the risk to maximize the profit. Friends, this technical analysis took birth more than 100 years ago when Charles Dow, he is the father of the technical analysis. He is the person who identified or he developed the technical analysis observing the market. He is the, we can call it as a grandfather of technical analysis. Still, whatever he proposed the theories, still they are holding. Friends, technical analysis is done through charts. We use same x-axis and y-axis. In case of x-axis, we put prices. In case of x-axis, we put date, and in case of y-axis, we put the price. So charts are used for studying the technical analysis. There are three types of charts. One is line chart, bar chart, and Japanese candlesticks. In case of line charts, we take only closing price for studying the purpose. In case of line chart, we take only closing price. So this is the simple way. This is the chart we take. We connect all the closing prices. We analyze. In case of bar chart, there are 4 prices in a day trading. So in case of bar chart take all the 4 prices into consideration, and bars are created for each day. In case of line chart, we were taking only closing price. In case of bar chart, we take all the 4 prices. That is the difference between, it is giving extra information for taking the prediction. And there is one third chart developed by Japanese people. This is called Japanese candlesticks. In case of Japanese candlesticks, there are 2 types of candles. One is white candle, second one is a black candle. In case of white candle, what is white candle? If the price opens at lower level and price moves and closes above the opening price, then it is called a white candle. Friends, here, see, if the price opens at lower level, for example 30 rupees, closed at 40, so increase it at the opening price, then it is called, on that day, the candle will be white candle. If the price, in the opposite way, if the price opened at higher and closed lower, then it is called black candle. What is the extra information giving over the other charts? Out of all the 3, this is very popular and widely used among the investors. See, here it will give you more information. Like by seeing the chart itself, if there is a white candle over today, there was good demand for the stocks, so that is why it went up. So there were more supply, that is why price fallen. This information, by seeing the graph itself, you will come to know what is the demand and supply for the each stock for 30 days. In case of other two charts, it is not the case. Just only information only giving. Here, the chart itself is giving demand and supply. Ultimately, we have to take into consideration demand and supply. If demand is more, you have to buy. If supply is more, you have to sell. Friends, the time given is very short. This is only a, I can say, brief introduction. There are different types of varieties of candlesticks pattern identified. The people, number of people are there. They have to study individually for better decision making. We'll study two patterns. How I will explain two patterns out of all the, because time is short. Here there is one hammer. This first pattern is called hammer. In case of hammer, you might have seen prices will be coming slowly down. Slowly down. Keep on coming. So when the price comes down, on one day it has to stop. On the last day, still price will go down, and marginally it recovers at the end. This is called a hammer. In case of hammer, the price is continuously in the downtrend. At the end, on one day, at the end of the period, the price goes down, new low it is formed, and at the end it comes to closing at marginally near to the opening level. So this can be white candle or black candle, and from next day onwards, price will go up. This is called hammer. The last candle is called hammer. Okay, it looks like hammer. The importance of it, once the hammer, if you observe, next day without fear you can buy the stock. That is the importance of the hammer pattern. Like similarly, if you go to hanging man, there is one next pattern is called hanging man. In case of hanging man, it is like opposite to the hammer. Here the price will be keep on going up and next on the last day, what happened at the end of the pattern, one pattern hanging man is formed. In case of hanging man, the price open with a gap above and comes down at the close with a long lower shadow. From next day onwards, price is expected to fall. Once you observe the hanging man, next day the price will fall. Friends, if you observe hammer, go for buying. You go for selling when hanging man is formed. Friends, I will give you one live example. Friends, what is meant by volume? Volume is a number of shares traded on a day. That is called volume. Number of shares traded on a day, either sell side or buy side. Both will be equal. So this is called volume. Volume is a volume. See, there are two important things we have to observe. The black one is called price. That is candlestick pattern. Down is volume. On a chart, you will observe two things. One is price. Second one is volume. Friends, here I will tell you the practically where I got really myself get benefited. This my friend, one Mr. Gautam is there. He was my ex-colleague, very senior person. He left Andhra Bank and joined Global Trust Bank. One day he called me and buy Global Trust Bank around 22 rupees. He also bought around 24, 25, good quantity, and he asked me to buy 22. Around that level he asked me. Even I also got excited because he was working with Global Trust Bank. I want to buy around, so I also want to buy around close to 5,000 shares. So I transferred. At that time he was having account with ICICIdirect.com. So I have taken money and put there, and I started put order to buy the stock. Around I personally put 22 level. On that day what happened? Little bit it went up. It could not happen. So I decided, got disappointed. Next day again I thought I want to buy. The second day I repeated. I kept around 22 rupees 50 paisa. On the second day also I could not buy. 2 days I missed. Third day, I want to buy an open market. Straight away, whatever the price I want to buy. Later, what happened? 2 days I missed. Third day, I want to do openly. I want to buy at open market rate. And then I got doubt. Instead of buying, then I went to chart. Friends, till now, 2 days I have taken a decision based on my friend's advice. Third day, I got, I could not, I want to take my own decision. So then I opened my chart. Then I opened the chart. The chart gave me a different conclusion. My friend says buy. Chart says sell. Then immediately I called my friend and told her something is wrong with the company. Find out and let me know. Then so I stopped buying the stock. So I have taken the money out. I don't want to buy. I have taken a decision not to buy. Then evening he called me and told her, and CB has given permission to sell the stock by the promoters. At that time there was a restriction. If promoters want to sell, they have to take prior permission. So CB permitted to promoters to sell the stock. So the chart, what the chart is selling, somebody is selling heavily. If you see the chart now, there are volumes. There are some rules are there. Volumes are. I will tell you. Price is going down, volume is increasing. This is a bearish. Friends, price is coming down, volume is increasing. Same thing happened with the global response. I observed this, I have taken the decision. There are other rules. Price is coming down, volume is falling. This is bullish. That time the price came down around 70 level to around 20 to 25 level. If this is the case, his advice is correct. But this is observed. So I have taken a decision not to buy. Then he told me, I asked him who advised you to buy. Friends, at that time, the driver of the Ramesh Gilli, he advised the friends.
Sir, can you explain that once again?
I will explain. See, the driver of Ramesh Gilli, he mortgaged his house and he purchased shares. He advised this Gautam, he is also a Telugu fellow. He advised this Gautam, he is also from Vijayawada, that place, to buy. So he also bought. Friend here, who advised the driver to buy? I don't want to sell. Friend here, so here, you got my point. Who advised the driver to buy? Now, we are following driver. See, actually what happens, friends, if somebody is crazy or a singer, even when you are traveling, even auto driver also will advise you to buy or sell. Right here? Same thing. So I have taken a decision not to buy. The chart says, friends, what I want to convey, impress upon you is take your own decision, independent decision, it will help you. If you follow somebody's advisor, you will be doing the mistake. If I have taken a decision of some other, see, buying is mine, but I got convinced by other. If it is a mistake, I will be losing and I will not be learning. In this case, I have taken a decision, this my own decision, this is wrong, this decision is wrong, that is why I avoided the decision, I saved my money. And for your money, you have to work. Nobody works for your money. Friends, that is the so actually from there later onwards, I kept a lot of energy to learn for myself. Actually, this is to be honestly with you to make money. I want to learn the subject. I want to make money for myself. That is why I have taken personally. I gone number of training programs. I developed the subject. Friends, I will tell you. Friends, what is the rule? Price. If price is falling means somebody is selling, and volume is increasing. That means they are selling more shares. Price is coming down slowly, and increasing. They are selling more number of shares. That means they think that price still go up, go down, still go down. That is why they are selling more shares. That is why it is not bearish. And price, second rule is price is coming down, but people are not selling. Volume is not increasing. That means they think that the price is falling temporarily. It may not fall further. If falls also, it will go up. That is why it is called bullishness. In case of Global Trust Bank, what happened? Price is falling continuously, volume is increasing continuously. That means later you know, it came to I was in 0.25, 25 MB. He lost that money. The person, my friends, they all lost money. If you have little bit knowledge about the stock market, that software, you observe, you can make good, but you can make better decisions. This practically, this is where I got more confidence on me and to pursue further. Friends, next. Friends, this is a chart of IDFC. This is my own figure, friends. Actually, friends, there was a number of reports that IDFC is going to get the banking license, and that banking license is going to spoil the balance sheet of IDFC. Number of bankers, some broking firms, they recommended to sell. So, number of they recommended even at 90 rupees, 85 also, even 80 rupees also they recommended to sell. And here I bought around 6,000 shares, around 81 level, friends. This level. I am seeing Economic Times observation. Economic Times, they were selling to sell, and HSBC also told to sell. Everybody was telling to sell the shares. I purchased at 82, 81, 75, I think around 80, 82 only I bought. All the shares. Still I am holding. Friends, what is the logic behind my buying? Friends, in this chart now, what is the one major thing you can observe based on volume? Historical volume is there here. Historical volume. Where it happened? It happened around this level. Around the 80 level. That is the only blind. This, if you apply the same rule, you can make tons of money. Only thing is you should have patience. Whenever there is historical volume at the nearing to the bottom, that is the last day. I cannot say last day, it may take another 4 or 5 days to recover. And after my fall, I went to came to 78. That's all. Then there was no stop. Went up. Now it is around close to 130. I am expecting around 200. This is the very simple observation. Here, only thing is, friends, this subject is technical. There is a complicated word, but subject is simple. The observation is simple. We have to simply what is the simple by seeing it. Volume is huge volume, historical volume, and that is the thing. And this point I learned from there is one book called Technical Analysis Explained by Martin Play. There he has given one text workbook to learn the technical analysis. Okay, that I purchased from imported book. Friends, I purchased. I have gone through the questions given by that. Out of this, now only one question impressed by. I got very much impressed. I want to test that question and answer. That is the question. He was asking which is the best and reliable indicator, historical one. That is the answer. I tested a number of charts and it got immensely helpful.
Yeah. Sir,
Tell me.
A question. Whenever there is the historical volume, does it mean that it would reverse? The trend would reverse?
Yes.
And going up?
Yes. Here, just see. Here itself, you see. Here itself, historical volume happened around 80 level, 82, 83 level. It came again down up to 78. Then it went up. Historical volume, the highest volume.
Why it is called historical volume?
What is historical volume? Friends, by seeing it, which is the highest volume? By seeing it 1 year. If you say 1 year, trading range, if you see 1 year, the volume will be huge volume now. It is meant for historical volume, highest volume.
So it's ideal to check by the end of the day?
Yes.
Every day?
Friends, there is a difference between two things I will tell you. One is trading, second one is investment. Trading is a short term maybe for 1 hour, 1 day. Investment is for more medium to long term, not more than 1 year. So if you want for investment purpose, you have to follow only daily charts. The charts we have to see only daily. Data, or you can watch the charts, 10 minutes, 5 minutes, 1 minute, tick by tick, of, like that. But you need not watch on a hourly basis. You can see end of the day. For investors, individuals, I recommend only for end of the day. You need not go to intraday charts. Historical means highest volume in the recent past. In the recent past, which is the highest volume? Like this now. Just blindly go on see. There are some softwares are there. They themselves will pick up. What are the historical volumes happened today? What are the swaps? So there are software. Now software is developed. Software is there. The software will tell you what are the swaps in which the historical volume happened. And
Any software name?
software is friends, softwares, number of softwares are there. For individual reach is Metastar, Falcon, and our even Sharekhan also they are giving, but they may not be giving explorers. They are giving. The software is very good. The Tiger, the software is very good. Other number of softwares are there. Tell me.
So in the previous example, you said that volumes were increasing over there also.
Price is falling, volume is increasing.
Here also volumes are increasing. How do you recognize whether it is a bearish thing or also possible that this is also a bearish situation? How do you recognize whether there is a selling going on right now?
In case of this one,
Yeah.
here, in case of IDFC, what happened? Friends, there is one concept called contrarian theory, and around that level, everybody will become negative, and the newspapers will be telling about selling, and here very few people will be buying. And see, for example, once you are in that market continuously studying, you can. That is common sense. You have ultimately you have to decide. And see, the chart also says. Chart says if price is falling, volume should come down. If it is bullishness, volume should not increase. And you can see the other cases now. There price is falling, volumes will come down. Volumes you have to see relatively. Relatively, volume is increasing or decreasing.
Here again, this price has fallen down and volumes have increased.
Here, the difference between that one and this one is here the price came around close to 150 level to 80 level, came down. At the end, volume happened, increased. One day increase, not every day. It is not increasing every day. Suddenly, people who got fear, they sold. This is one day. I am not talking about continuously. A single day it happened. Historical volume happened. So that is why from there you see, from there it went up. See, it will come through experience. You have to practice. Once you are practicing, it will come.
When you change in the pattern would show some kind of reversal.
Yes. Tell me.
So if we use a channeling technique, it will give a better understanding that whether price will move in future, like support and resistance.
Friends, that what I am telling. This subject is a vast subject. We have to see other technical support, resistance, Fibonacci retracements. Okay, these are all moving averages. We have to apply other techniques also. We are touching very briefly, and patterns. Friends, there are different types of patterns are also there. Besides volume, for like head and shoulder pattern, double top, double bottom, gaps. These are the different forms. It takes more time. Friends, next one is indicators. Now you are asking something now, and if you see indicator, it comes to oversold. RSI it will be more than 70. There at the same point, historical volume happened. There, if you see RSI, relative strength index, it will be more than 70. So it is a oversold position. There you will get reversal. Friends, more than a number of people, they have developed different types of indicators, momentum indicators, oscillator indicators. More than 200 to 250 indicators are there. Out of that, now we will go through only one indicator. For example, this relative strength index. Friends, there are two terms are used. One is oversold condition, and second one is divergence. What is meant by divergence? Here, that one red line is there. There, upper one is price, down one is indicator value. Upper one is price values, down one is indicator value. There is this is called negative divergence. What is negative divergence? See, what is convergence? If both price as well as indicator value move in the same direction, that is called convergence. In this case, what happened? Price is rising. In the down, negative divergence is written down. Where price is rising, the indicator value is falling. That is called negative divergence. Friends, clear? The price is rising, indicator value is falling. This is called negative divergence. This is the time to sell. This is the time to sell. If you observe negative divergence, this is the time to sell. Same case, if you observe in case of IDFC, it will be positive divergence. It came to down, and at the bottom, positive divergence you might have observed. Hello, friend. Correct? You have to take the support of other indicators also. Friends, yes, sir, time is okay. Friends, there is one concept of stop loss. Stop loss is you buy the stock and you determine to what extent you can carry the loss. If the market goes against you, that is called stop loss. You have to put and compulsorily come out. Whereas professionals, professional traders, they keep stop loss even before entering the trade. Professionals. That is the best way to reduce the risk. Friends, thank you very much. We'll answer any other doubts are there at the end. Thank you.
Thank you very much. Thank you very much, Dr. Reddy, and with pleasure hearing you. And I'm quite sure many people have got a lot of questions to ask him. And after the session is over, you can catch him for your queries. Now I have got the proud privilege of introducing Mr. Hemang Jani. He's a chartered accountant by profession, has been in the market for over 18 years, headed the advisory risk in Sharekhan, heads the advisory risk at Sharekhan, appearing as expert speaker and in various media channels. And he's going to talk on investment outlook today. We all are waiting to hear him and tell us something, how to go about trading and help. Some of them are very new in the market, and it will be very good of you if you can tell them how rationally they can go about investing and making money also, because financial freedom is what our theme is all about. Thank you very much for coming us over here.
Hello friends, good evening. I hope I'm audible to all of you. Yeah. Hello friends, good evening. First of all, thank you so much, Regenesys team, for inviting me here. It's a pleasure. Friends, my presentation is basically in two parts. First part, I'll just take you through why one should invest in equity, because as he told that there are a lot of guys who are new in the market. So why one should consider equity investment. And the other thing is that the markets have actually gone up. If you see last about 3 to 4 months, there has been a very swift up move in the market. So because of the experience of last 3 to 4 years, where it has not been that great, because we have more than 11 lakh customers in our company Sharekhan, and generally there is a tendency to pull out the money from the market whenever the stocks tend to go up. People are generally reluctant to put money into equity market because last 3 to 4 years practically people have not made money. So there's a lot of reluctance, there's a lot of doubt whether it makes sense to go for equity market, given the fact that the markets have run up. So I'll take you through some of these things in my presentation. First of all, the statutory warning to all of you friends that low exposure to equity could be injurious to your wealth, because you know, a lot of people we meet in our daily lives, you know, gradually their equity exposure has come down for whatever reasons. You know, they have not made money, and there's a general feel that, you know, it's better to put money into maybe tax-free bonds or fixed deposit or real estate. But you know, equity is something that we are not very comfortable with. So friends, yes, last 3-4 years have not been that great, but I'll share some interesting data and statistics with you. The fact of the matter is that for retail investors, you know, next 3 to 5 years are going to be phenomenally good. You know, I'm sure that some of you would probably remember somewhere down the line that, you know, this meeting we had and this was a message that we tried to convey. But if we don't have enough exposure to equity, then probably 3 to 4 years, 5 years down the line, we will be regretting that why we did not invest in equity. And what happens is that, you know, if we don't take certain decisions at a certain point of time, then, you know, it becomes all the more difficult, because, you know, that price level has gone up, so it makes all the more difficult to take that decision. So as I said, my key presentation would be why invest in equity, and other thing is why now. Okay friends, this is just a broad, you know, statistics or data points on what kind of money has been made, because generally people get more influenced by what has happened in the last 3-4 months, you know, 1 year, something like that. But if you step back and this has actually happened over a period of time, then it will give you some perspective. So this is what has happened in the last, let's say, more than 25-30 years. Simply put, every 10 years, friends, the market has gone up 6 times. If you see the slide here, from 78 to 88, from 100, Sensex became 600. From 1988 to 1998, 600 became 3600. And from 1998 to 2008, Sensex from 3600 went up to 21,400. So this has given an annual return of about 19.6%, which is phenomenal. You know, like if you take into account the tax benefits, dividend part, etc., this is a phenomenal return. But I think most of the people have not been able to experience this kind of a return, right? Other thing is that, you know, when we talk about returns and equity investment, a lot of negative thoughts come in the market. There's a lot of negativity. Now people are talking about drought, the monsoon is not up to the mark, things are not looking too great politically. You know, this government had a lot of hopes that, you know, things are going to move very fast, and market also has actually reacted so positively. But probably, you know, globally things are not looking great. Iraq, there is a problem. The crude oil can actually go up. So friends, these kind of news flow, both in the domestic market as well as in the global markets, have been happening. You know, it's not for the first time that we are going to experience like this, something like this. And it will keep on happening, right? But the market is extremely dynamic. So all this negative news flow would be part of our lives, and equity market will adjust to that. In fact, some of this negative news, when they are over discounted, because there's a lot of hype in the media, newspapers, when you keep talking to people, they'll say, oh, things are not looking that great, it's time to get out of the market. That might give you an opportunity. Like we shared the example of IDFC. You know, probably people have a lot of negativity around certain topic in the market, adjusts itself very fast. So at that point of time, if you're smart enough, probably it will be an opportunity for an investor. Okay. So the single most important factor that will drive the market, that has been actually, you know, giving this kind of a performance, has been the earnings growth of the companies. And if you see this particular chart, from 1978, the average growth in the earning has been close to about 18%. It's phenomenal. And that is the single most important driving factor for our markets. So I give you that simple analysis that every 10 years, the market has been going up 6 times. 78, 100, 88 was about 600, then 1998, 3600, 2008, 21,400. So by that logic, what would be the level in 2018? You just guess that for me. Over a lakh? Yeah, looks achievable. I'm sure a lot of people would have doubted whether it's possible. Yeah, a lot of people have doubts. Yeah. Friends, when we were at 3600, nobody thought it can touch 21,400. Even just about 4 months back, when Nifty was around 6,200, nobody thought we could be close to 8,000. So when you look at a certain level, it looks difficult, but this has been happening. It's something which is going to happen. Only thing is that whether it will happen, 1 or 2 years up and down. Sometimes market will start, discounting things ahead of the actual thing. Sometimes it may take a while, but it will definitely happen. There's no doubt about that. So we have to start that with the belief that it will happen. Then only we'll be able to, get the benefit out of it. The other thing which we have noticed is that when things are bad, it's there in our mind that okay, my portfolio was down 60%. This is the stock that I bought and it went down 40% and stuff like that. But after that, when there's a certain bad phase, after that the good phase which comes back, we never look at the actual return that the markets give. So if you see, I have just put down certain statistics for you. In a certain phase, like for example here, 94, 98, this period, the market was down 24%. But after that, this period, 1990 2000, market moved up 94%. Similarly here, this phase, market did not go anywhere. But after that phase, there was a big rally in the market. It was up 263%. I'm sure some of you must have experienced this. 2003 to about 2008 period. There was a big rally and everybody made big money. So after that, they lost also a lot of money in 2008. But market keeps on giving this kind of an opportunity. And from 2008 till February 2014, market has practically not gone anywhere. It was just up 4%. So after that, now that we started seeing the things happening, there could be a big upside over the next few years. And somebody asked me that he has a doubt whether it can actually go up like that 1 lakh level. See, if you just look at the like some basic stuff, I'm not going to use too much of technical jargon, but generally market people look at price earning ratio, right? This is the PE band, etc. So if you look at this, the PE ratio for our index has been about, on the lower side it's about 11-12 times, and on the higher side it goes to about 22-23 times also. So if we just take a base PE of about 50 here, and if you just put the EPS with a growth assumption of about 70 to 80%, you can have an EPS of about almost 4,000. Even if you take a very conservative estimate, we'll have a PE of about 15, and we'll have an EPS of about almost 4,000. The minimum that you can get is about 60,000. So even by valuation parameters, it's possible to see 16,000. And if things are a little better, because when we are too negative, our expectations are too low. Right now, like people had a very low expectation from the market, but we have seen last 3 months what has happened. Many stocks have doubled, right? So this can also happen, and market can actually surprise you on the way up as well. So that's the big picture that I'm talking about. The other important question is why now? This is a broader picture that yes, in equity market, if you really look at maybe 5 years plus, it's possible to make big money. You need to have patience. You have to invest in the market regularly. And more importantly, you need to invest in the right stocks and ideas. If you are too greedy and try and chase some bad quality stocks, probably you might make losses also. But overall, if you have a basic discipline in place and you stay focused, you will make money. See, now markets are trading at all-time high levels of about 25,000 Sensex and about 7,500 levels of Nifty. So the obvious question is that, is market providing an opportunity at this level of index? Friends, there are two important things which have happened. One is that we have a changing political equation. We all know that there is a decisive mandate to Mr. Narendra Modi government. And also importantly, we have an economy which is showing signs of stabilization. If you look at some of the data points, like index of industrial production, the vehicle sales, and cement dispatches, some basic stuff, it's showing some kind of an improvement. So both the things are happening at the same time, which is very important to have a better profitability from the corporate sector. So we have a deadly combination. You have a very dynamic, Prime Minister in the form of Mr. Narendra Modi, who's known for pro-growth, is decisive. So there are certain important policy decisions he's likely to take, right? So that is something very important. Other thing is that you have a very smart, dynamic governor in the form of Raghuram Rajan. Some of you would know that how he handled the forex crisis. Now there was a big pressure on the rupee when we had a forex problem, and the way he managed that entire thing, from 65, 67 level of rupee actually, improved to about almost 60 or thereabouts. So from a foreign institutional investor's perspective, the stability of the currency is very critical, and you have somebody really very good at the helm. And other important thing is that after 4 years of slowdown, like most of you would be aware that, at the corporate level, people were in a cost control mode. People were not spending enough. People were not recruiting. After 3 to 4 years of challenging, phase, now people want growth. Now, people are feeling more confident about it. So you have a deadly combination of a very, good dynamic prime minister. You have a very responsible RBI governor, and the corporate India, which is hungry for growth. So this is a deadly combination which probably happens in 30 or 40 years of, history of 30 to 40 years once. So this is something that we should keep in mind. Just a brief idea about what kind of, performance Mr. Modi has delivered in Gujarat. Most of you would be aware because at the election time we had a lot of debates about what he has done in Gujarat, etc. But just to give you some basic idea, the growth in Gujarat during Narendra Modi's regime was about 10% in GDP, as against the average growth in India of about 7.7%. Also, Gujarat's contribution to the India's GDP, which was about 5% or thereabout, went up to almost about 7%. And Gujarat's debt as a percentage of GDP actually fell from 38.8% to about 25.2%. In the debate, the people are saying that actually Gujarat's debt is much higher. Like if you see the per capita debt, it was much higher. But when you look at as a percentage of GDP, because GDP has also grown, actually it has come down. So on most of these parameters, Gujarat has done well, and most importantly, from stock market perspective, some of the PSUs based out of Gujarat, when Narendra Modi became the chief minister, they were reporting an aggregate loss of about 2,700 crore. After he took over and he actually came up with some interesting policies, etc., these PSUs actually reported profits of almost about 4,000 crore. So on that front, he could make some policy framework which were more investor friendly. The administrative decision making was much superior and faster, and he could use technology to enhance productivity, focus on agriculture and stuff. So he has a proven model which is done very well in Gujarat. So there are expectations. Obviously, see, when you are dealing with government, one has to be a little realistic, because in the stock market, the hype and the expectations are too much. But when they have to take, like recently, this gas price decision has been delayed, right? Today morning, this news came. So a lot of people were disappointed. Market reacted. ONGC was down 6%. Reliance was down 4-5%. But markets are bound to behave like that. When you are expecting an X amount of thing from government, it will not happen on day 1 or day 2. They also have to, deliberate and come to a thing which is more proper, keeping in mind the overall interest of the economy, etc. So that is something that we have to keep in mind. And these kind of falls or this kind of reactions, negative corrections, would provide opportunity to investors, because eventually these things are going to be, they'll definitely happen. So the basic thing is that the investment cycle or the capex cycle, which had come to a standstill, people were not willing to spend money on building new capacities. They were doing most of cost control and stuff. Now there's a hope that this will be back on track, which is definitely very important, particularly for certain sectors like capital goods, companies like L&T, Thermax, Crompton Greaves, which are more dependent upon the capacity addition of other companies. They would be the one which would actually see a massive growth because of that. The GDP growth overall looks to have bottomed out. If you see from about 9.5 or 8.5% kind of a growth, our GDP had come down to almost about 4.4%. Now it's not as if that GDP has shown a phenomenal growth, but now we are stabilized. We have given initial indications of some kind of a recovery, which is a big positive. And most importantly, the current account deficit, which is something that people were worried about 3 to 4 months before. Now, if you look at the latest number, it has come in as about $11 billion, which is much better than what the market was expecting. So now people are not talking about rupee depreciation anymore. Though there could be some kind of a blip because of crude going up, etc. But people are more saying that now up to what level the rupee will appreciate. Nobody is talking about 65, 67 levels of rupee, which is very important from a FI perspective, because when foreign institutional investors put money in any market, for them the currency of stability and the stability of the policies, these are the most important factors. So on that parameter, things are looking much better. And I would like to share one more interesting thing with you, that if you look at the interest rates globally, in Eurozone, interest rates are almost zero. If you look at their recent move, they have again cut the interest rates. They're going to infuse almost about 400 billion euros in the system. In US, though they are doing tapering, etc., the interest rates are pretty in a comfortable zone. Okay, in Japan also interest rates are pretty low. So when you have a globe where the interest rates are low and the central banks are pumping money into the system, that money will move into an emerging market where there is a currency stability and where the interest rates are much higher. Even in our markets, interest rates are at about 8.5%. So a lot of money flow is likely to come into the debt market, which is definitely going to be important from the stability of the currency point of view. So there is an expectation that rupee will remain stable. And in terms of flows, friends, we have seen that in the last about 2 years, though the markets have not been that great, FIs have put in a lot of money. If you talk about this year itself, from January till now, almost about 40,000 crore has been invested in the equity market. I'm not even counting the debt market investment. And there's an expectation that this year you will see almost about 1 lakh crore plus kind of an investment by FIs, which is definitely great news for the stock market. And most importantly, friends, if you look at the ownership of our equity, top 50 or 100 stocks, retail investors have been actually bringing down their exposure. This is the point that I made earlier, that whenever you see a certain price point, let's say somebody has invested in an X stock, and that stock actually came down, the moment you see that original price coming back, people tend to get out, which is what is reflected in this chart. If you look at the FI's ownership, steadily it has gone up to almost about 25%, and the retail investors' ownership has actually come down to almost about 14%. And if you look at the rest, promoters hold about 49%. So there is a very little component of money which is there for the retail investors. So which is not a great news. I mean, it's important that retail investors also own enough in the equity so that they can participate in the overall growth story of the economy. This is the data on the retail investors, friends. The retail investors' money into equity market, both through direct equity as well as through mutual fund. This used to be about 7 to 8%. This is as per RBI data. Actually, it came down to almost zero. People hardly invest in the equity market. Other thing is that the corporate earnings growth. People were hoping that growth may not be that great, but now people are talking about 14-15% kind of a growth. So there is an expectation that once the capex cycle revives and the confidence level comes back, the actual earnings growth could be more than 15 to 18%, which is definitely a big positive for the market. And the fact of the matter is that despite the markets have run up in the last few months, if you look at the valuations per se, they are still quoting at about 16 times price to earning. I just gave you this information earlier, that the overall price earning ratio which we quoted here, in the 2007 period when the market hit a high of 22,000, it had touched about 22, 23 times. The lowest that we have seen is about 11 times when the global financial crisis happened in 2008. It's been moving in this band, and still, it's available at about 16 times, which is, at average valuation. So, we should not look at the absolute level of the Sensex or Nifty. We should look at the valuations. So, valuation-wise, things are looking pretty reasonable. Talking about the global factors, friends, in US markets, some of you must have seen the news today that actually GDP shrunk by almost about 2.8%. So things are not looking that great, though some of the data points have been positive. They've been doing tapering, but overall people are very confident that US economy will do well and they will definitely support the entire economy through enough pumping, etc. So no major hiccups are likely. Eurozone, yes, things are not looking that great, but Mr. Mario is right there to support with all the liquidity, etc. Interest rates are likely to remain low. The only thing that I would be worried about as far as global markets are concerned is that the implied volatility is low. Now, what is this implied volatility? See, when people don't expect any major accidents, that is the time when the volatility is low. So the chances of actual accidents are high. Because people don't expect when we had touched the 22,000 level, everyone was euphoric that nothing can go wrong in the market. You should put money in the market and you will make money. So when there is a complacency, when you don't expect anything, at times accidents can be very fatal. So yes, implied volatility in the global market is low. People are not expecting any accidents, but some small development can catapult into a major crisis kind of thing. It can happen. It is not expected at this point of time. This is just a thing that we should keep in mind. So what is the net conclusion? Friends, what we feel is that this is just the beginning of a big bull market for India for the next 3 to 5 years. There is an opportunity to grow net worth by participating in it. If you don't put money at work, it will not grow. We have to actually go through pain. You have to take the decision. Only thing is, make sure that you invest in good quality stocks, have a proper diversification, etc. Review your own existing exposure to equity market. Ideally, it should be about 40 to 70%. If it's too less, probably, for example, if I have only put about 10% of my money in the equity market, even if I get 100% return in the overall scheme of things, it's not going to matter. So, it should be a reasonably or meaningful amount which we should have in the equity market. Other thing is that a lot of people have portfolios which are not doing well. Now they are not willing to take that decision to get out of certain stocks which are not in profits. I think a lot of people go through that pain. So we have a very interesting tool. We have made a very automated, sophisticated tool for investors, wherein through an automated process we clean up the entire portfolio. We have taken the help of the Bloomberg. So if some of you are interested, we can help you with that. Talking about the risks to our prognosis, inflation is definitely going to be an important thing, particularly given the fact that the monsoon is not going to be up to the mark. There are reports that like June has been a total disappointment. So if there's not going to be any kind of a meaningful pickup, then inflation could be, particularly food items. There could be a bit of a disappointment, which would keep the interest rates higher. And particularly some of the sectors which are more dependent upon the agriculture. There could be some kind of a negative reaction. Though in our overall scheme of things, the agriculture as a component does not contribute more than about 13 to 14%. So it's not going to have too much of an impact on the GDP, but in terms of sentiment, particularly some of the auto companies, the rural focused companies, there could be some negative reaction. Just trying to take you through important ways in which you can participate. You can participate in 3 ways. One is direct equity. I'm sure most of you are aware. There's an equity mutual fund route for those who don't want to actively look at it. And there's an exchange traded fund, ETFs, which is again a very interesting, innovative tool, which is very popular in the global markets, but probably many investors are not aware about it. It's a very safe way where they invest in a basket of about 50, 100 stocks, and which is a very interesting way to participate in the index. Now, talking about which route is right for me, I'll just summarize this based on 3 or 4 parameters you can choose depending upon what kind of skill set or understanding you have, time available with you to review your investments, frequency of investment. Like if you are a regular trader, every day you're going to do it, then you better do it yourself, and the risk appetite. So between direct equity, mutual fund, and ETF, just try to summarize what are the parameters that you should look at. Now, talking about the direct equity, we have come up with 3 interesting themes. We've named it modified portfolio because people want to participate in the sectors that would really benefit the maximum because of the policy initiative, the better sentiment which is prevailing in the country. So there are 3 things that we have identified. One is the policy push and the better decision making that will happen. So companies like L&T, Crompton Greaves, Ultratech, and Vatek Vabak. I'll just give you quick arguments on some of these companies as well. Then there's a PSU basket. If you remember, PSU stocks were not doing too well in the market in the last 2-3 years. This government, the earlier government, actually they were doing a lot of follow-on public offers, and they were doing it at a discounted price. So people had lost faith in the PSUs. Now that this new government has come in, there's a lot of confidence, and there's a re-rating which is going on for the PSU stocks. So some of the stocks which are looking good are Container Corporation, Engineers India, Coal India, BPCL, and other thing is the banking and the auto space. So banks like ICICI Bank, State Bank, LIC Housing, and stocks like Maruti, Mahindra from the auto pack, they should see a lot of good growth revival over the next few months. So this is the basket that we have made. Just quickly run you through why we like these ideas. L&T, friends, we like, all of you know it's the largest EPC company of the country. What we like about this company is the fact that when we were going through a downturn in the last about 3 to 4 years, the way they handled that downturn was extremely important, because you know what is important. Let's say when I create a portfolio, okay, when something goes wrong, what is important for me? How much downside I will see. Okay, if I invested 100 rupees, if a stock goes down 70%, it will give me a lot of problem. So L&T was able to handle that part extremely well. They could actually achieve a decent growth of about 15-18%. So the stock also came down, but there's a bit of a comfort level that we have towards that management, their ability to withstand that particular period. So L&T is something that is done extremely well on that front. They have extremely diversified exposure, power, telecom, other infra-related things. So they're not like BHEL is a company which is so much dependent upon power. 80% of their business happens on power. So if there's some kind of problem on that power policy front, then BHEL is going to go through a lot of problems. Whereas they have a far more diversified exposure. They have a petrochemical, power, cement. So one sector going bad will not have too much of a problem. And if there's going to be a revival in the capex, believe me that L&T will give you the maximum return. So this is a must-have in the portfolio. Crompton Greaves is something that we like. This company has gone through a lot of troubled times in the last 2-3 years. The management, took few decisions which market did not like. Now that there are talks that this company might just be sold over the next few months. It's just a buzz. It's not confirmed as yet. But overall, in some of their European subsidiaries, things have actually gotten a little better. And industrial system and power system, these two units which are going through pain, there is a definite sense of revival. And this stock is available at a reasonable price point. So this is something that we like in the infra space. Ultratech in the cement pack, this is the best company, the highest capacity of about 54 million tons. On most of the parameters, operating profit per ton, the costing per ton, the geographical presence part, it's doing extremely well. It's not a cheap stock, so some of the A group stocks you may not be able to buy at the cheapest level, lowest PE levels, but it will give you a lot of stability and growth both. So from that perspective, it's looking pretty good. This is an interesting stock, Vatek Vabak. Some of you probably may not be aware about it. It's a South-based company. They specialize into water treatment, desalinization, and treatment of affluent part. They have a lot of patented technologies. And now this government will have a focus on the water river front. Like Mr. Narendra Modi is talking about connecting the rivers, creating that infrastructure, like what he has done with Narmada Canal and stuff. So with that as a focus, this could be the company that would really be able to grow extremely well in the next 2-3 years. Container Corporation, a very quality PSU company. If we are going to have a dedicated freight corridor, and if there's going to be improvement in our port traffic, then this company could do extremely well. Engineers India has actually done very well. It is almost double in the last 2 months. But this company would have a phenomenal visibility in the next 3 to 4 years because of the kind of growth that we are going to see on the infrastructure and oil and gas sector particularly. So this is something that we like at this point of time. Coal India, a lot of People will be aware it's the largest coal manufacturing company in the world, and of late the production growth had come to a standstill. Now in the last about couple of quarters, we have seen some growth coming back. And if some of the environmental related issues are addressed, there could be a big upside, because if you look at the valuations, the Coal India, despite being the world's largest company, the valuation at which it's quoting is about 40% discount to another company which is, let's say, trading in US or European markets. So there's a huge discount at which it is quoting, and we think that it is not justified. In the oil space, we like BPCL. Both BPCL and HPCL both are good, but I think in terms of management quality and the earnings that they are reporting, BPCL is doing a far better job. Plus, they also have some oil assets in South Africa, so which gives some kind of a stability to the business model. And Oil India, of course, there's a bit of a disappointment that this gas price hike, which the market was expecting, has not come through. But we think that this is an extremely good quality stock, so we should have that in our portfolio. And the banks, ICICI Bank, I think most of you are aware, very well diversified franchise. They have an insurance company, which is the largest private sector insurance, and a lot of reforms are likely to happen on the insurance front. So there is going to be unlocking of value of that as well. State Bank, a lot of people had the doubt that this PSU banks, the management quality is not good, there are a lot of NPA related issues, etc. Yes, those issues are pretty much there. But I think when you see the economic revival happening, because of some accounts going bad like Suzlon and Kingfisher and some of these names, we feel that once these issues are addressed, now there's a change of management. Okay, so once those issues are known in the market and they've been provided for, the economic activity starts, then the loan growth comes back. So we think that PSU banking space is the only sector which is available at a very reasonable price point. So we should have some quality, names in that. So SBI looks the best. LIC Housing would be a very interesting NBFC to have in the portfolio, because these are again available at a very good valuations. Maruti Suzuki is something that would benefit. Some of you would have seen this news that the excise benefit, facility which was there has been extended till December. And somebody was asking me, why Maruti? Maruti is at 2400 plus, right? So isn't it too expensive to buy this stock? I gave him a very simple example. That see, if you take my example, I was working in a broking company. Things have been so bad in the last 3 to 4 years. I'm sure some of you would be aware about it. So if there's some stability to me, if I see some visibility of my income, and there's some growth because of equity markets doing well, what am I going to do? I'm going to buy a good car, right? So the discretionary spending, like people go on holidays or go to good restaurants or buy good cars, when does that happen? When you see confidence about your stability of your income, growth, etc. So this is a sector where don't look at the price point, look at the kind of growth that it can deliver in the next 2 to 3 years. So I think, and see, other thing is that Maruti was offering discount to most of its products, about 10, 15, 20,000, because the growth was not there. So now if they discontinue the discount itself, how much will it contribute to their profit? It will be about 3,500 crore. So 3,500 crore will come only because of the discontinuation of the discount. Apart from that, because of the new model launches like 800, they're going to have a diesel version of that. Crossovers are going to be launched. So there's going to be enough growth in that space. So Maruti is something that we really like. Mahindra is another stock which is a good quality stock, which has a very strong presence in the rural segment also, because tractor division is doing exceptionally well there. So friends, this is the overall sector-wise preferred picks list that we have come up with, which you all can have a look at it. And for those of you who are interested in knowing which are the good mutual funds to invest, we've just prepared a list. This is based on our analysis of the performance of the scheme and their last 3 to 4 years time, how they have been able to withstand the downturn, etc. These are some of the interesting mutual fund picks that you can have. And for those of you who want to invest in the exchange traded funds, like recently this Goldman Sachs came up with that PSU basket, CPSC, that delivered a phenomenal return. Like from about 17, 18 levels, it has gone up to almost about 24, 25 now. So similarly, you have Nifty Bs available. Like for example, just give you a very simple example that somebody who wants to invest in the market, he doesn't know which stock to buy, which sector to buy. There's a lot of confusion because when you see in the media or read the newspapers, they use a technical jargon, etc. So you don't know which one to invest. For them, the safest bet, if you ask me, is to buy Nifty ETF. What does that mean? The entire component of 50 stocks, right from ACC, Reliance, Tata Steel, Tata Motors, whatever stocks are there in the Nifty, at one go you can buy. So by buying that one unit of ETF of Nifty Bs, you are able to buy that 50 stock. So there's enough diversification which is built in. You don't have to use your brains because see the way they manage the index is done in a very sophisticated way. Okay, which at an individual level it would be very difficult for me to achieve. So by investing, there's an automatic diversification. I get the benefit of dividend, and there's a tax advantage also. Plus the operating cost when you compare ETF versus a mutual fund, it is much less. So this Goldman Sachs Nifty Ps or that PSU basket, or there are junior Ps also. So you can have some small component of that. You can do a systematic investment in that. I think that's a fantastic way to participate in the equity market. That's it from me, friends. Thanks a lot for your patience. And if you have any questions for me or him, we would love to take them.
Investor, how to handle tax issues, particularly while selling return.
See, tax part, if you are a trader or very regular trader, or if you are doing some future and option trading.
Investor and equity and mainly 1 year and above 9 months.
See, one advice that I would give you is that if you are going to do frequent trading in one account, it is not advisable because the assessing officer might treat that as a trading account. So your benefit of long-term investment or short-term capital gains might be questioned. So try to have a separate account through which you do your trading, if at all you are doing it.
It is not only
trading in the sense you buy it today and let's say you sell after 3 days, that's also considered trading. So if there are too many transactions in your account, okay, then you keep that account separate from the other account where you don't do too many trades.
One can have two trading accounts.
So you can do it in your family member, some other entities name I'm saying. If you have 2 or 3 entities, if you are doing trading, then you do it in one particular account, and your investment and other things you can keep separate, so that there is no risk of that being treated as a trading income.
For long term, there is no taxation.
Yeah, long term, like see, the tax structure is like this. Though now in this budget, there is a expectation that probably short term capital gains tax, which is currently levied at about 15%, they might make it tax free. Now this is just an expectation, but currently, if you buy the stock and you sell within 1 year, you have to pay 15% tax. And if you buy the stock and if you hold on to it for 1 year, you don't have to pay any tax. Similarly, on the dividend, you don't have to pay any tax. So it is advisable that you buy the stock and keep it for more than 1 year. So you will get a tax-free dividend. Plus, if you sell after 1 year, there is no tax liability on it. Yes, please.
Hi. Does Sharekhan have a proprietary desk? And if so, are we currently holding any of the stocks that you have mentioned?
We do have a proprietary desk, but we don't invest in equity as such. We only invest in the fixed income. So we have let's say investment in some of the liquid funds, and we do arbitrage. We buy the equity, sell the futures. So we earn about 12-14% kind of a return. But as a company, we do not have direct investment in equity. Our board of directors don't allow it. Yes, please.
As a new investor in the market, I don't know much about stocks related to stocks. So, do it recommend you? Do you recommend me as a newcomer to go to a course or something like that? to understand the market, to understand the stocks? And if it is yes, then which is the course and who provides it?
Well, actually, I think you can get in touch with people here in this Regenesys foundation. I'm sure they will be able to help you. But yeah, I mean, see, you should have some basic knowledge about equities and what are the different things available. Whether you should trade, whether it makes more sense to go to mutual fund or ETF. There are certain things that you really need to look at in terms of pluses and minuses and how much time you can give it to it, the review frequency. Then you should dabble, because otherwise you might just end up making some wrong decisions.
For a gamer, which is the tool to stay updated with the equity market and all, like the media channels, which are the best tools these should be?
I think if you ask me from an investment perspective, in fact, if you are listening to too many of these media channels, it may not be great, because conflicting news, a lot of hype is there. You might end up making a wrong decision. I'm not trying to say that the information that you get is not right, but if you really want to have some basic information about companies, there's a very simple tool available. You go to the respective company's website. There's a very interesting section called Management Discussion and Analysis. Okay, there's a very crisp and nice stuff available on it about what the company is doing, what their plans are. That should be good enough for you to have a basic knowledge of that. And then you can look at a lot of websites which are available, where you, like BSc, NSE website, you get enough information about the financials of that company and all. But the basic information about the company, go to that respective website and go to the management discussion in that annual report section. It's a very 2 or 3 page report. It's very informative. It's very authentic also, because sometimes the news which are flashed in the media, they are source based. So it's not as if that it has happened, etc. So authenticity part, rely on that.
More questions, please? Thank you.
Thank you so much.
Well, before we end, we would like to ask some of our friends who have been investing and investing recently. We started their investment journey recently. Can share what things they have done right or wrong, so that other members in the community gains from their experience. Anyone would volunteer? Yes, please. Here is the mic.
Recently,
good evening, all of you. Recently, there are some advertisements that sir told on CTSE ETF. It came in the newspaper very it was not a wide publication, but that time market sentiment was little down. But being I am working in Bharat Petroleum, and PSU stocks were mentioned there. I thought at least I will not lose money, and some discount was there. Keeping that in mind, I invested, and today it was at 17 or 18 rupees it was, and now it is 25, and hopefully it will not come below 17. Keeping that that in mind, I do not know much about this technical and all this, but today I gained little experience from Mr. Reddy, and hopefully this is the little way one can do those who are beginner. Thank you.
Thank you. Anyone else? Anyone else? Volunteer, please. We look forward. Anyone else who has? Yes, Nisha, you have invested? Come. You wanted to share. Anyone else would like to share? Yes. You made a lot of money, I thought. Okay, friends. Let me, before we close, and I invite our vice chairperson to give the vote of thanks. Let me tell you all one announcement just now. Director told me to announce actually that we'll be having 2 days or 3 days MDB program on the various fundamentals of investments to teach you all. There will be paid program most probably. It's the MDP, but we'll keep the fees nominal so that people can participate and gain from learning the fundamentals of market, and it will be 2 to 3 days program. We have not designed it fully, but we'll announce it shortly. We will have it before by September we should have it. Okay, look forward for the announcement and tell your friends to join it. I assure you that we will do a good course over there. Thank you very much. May I now invite Shamita to please, anyone else would like to share anything? Welcome, otherwise.
Sir, about the next meeting.
Yeah, that's Shamita will say, sir, 25th of July.
I'd like to thank Mr. Jani for making time and giving us such an interesting and informative session. Really, we probably would like part 2 to this and hope we could make time again. Thank you so much. And Mr. Reddy, thank you so much for demystifying some very difficult technical concepts. Thank you both of you all. And as far as Investment Club is concerned, we'd like to see you all again. And the next meeting will be on 26th July. Am I right?
That's Saturday.
Okay, sorry.
The last Thursday is 31st.
Okay.
No. Actually, 24th July.
July.
25th July.
Okay. So it will be 25th July. We have your contact details. So anybody, all of you all who have come, we'd like to see you all again. And we want the group to grow bigger. So thank you so much for coming on a Thursday evening. Thank you. See you all again.
Thank you.
Thank you, Mr. Sanyal, also. Thank you so much.
Thank you, sir. Please tell your friends to join the club. We want to make a big club. And I think, so we look forward to you again. And thank you very much, everyone. Before we end. Thank you.